And welcome. It's Mary Ellen McGonagle here with your weekly MEM Edge show, the show where we put you in front of where the action is in the broader markets. And I have to say it was quite a week for the books. So lots, of course, that we are going to go ahead and cover. As usual, we will begin by taking a look at the broader markets, get a feel for where we closed the week and what we can look forward to, and then how to trade gaps up on news. This earnings period, there has been over 160 stocks that have gapped up, and we're going to take a look at how you can play those gaps up, what to be on the lookout for going forward in select stocks. And then also Ford versus Ferrari, the race to a new era. We're going to take a look at some of these electric vehicle stocks and then other add-on plays in that area. Also, Pfizer came out, of course, with big news today. So the Pfizer rally and decline. There were stocks that benefited from that news and then other areas that did deteriorate just a bit. Last up, all about earnings. So we're going to take a look at some of the names that are due to report next week, names that reported last week, and then a little bit of a kind of a funky, well, I can tell you in essence, in reviewing those stocks that reported last week that were up the most, there was a theme in there. So I'm going to share that theme with you, and then also what we can look forward to next week relative to that earnings season still in full swing. So let's take a look at some of the more impactful headline news this week. The Fed did come out and announce that they are going to be tapering their bond buying. So not a lot in the way of surprises there, but generally the markets were pleased. Also, we did see weekly jobless claims fall further, and that's good news. That came out on Thursday. October unemployment did come out today. It fell to 4.6% after adding 531,000 jobs, and the markets did cheer that news. There's a lot of underlying news within there relative to wage, weekly hours, and all of that is pointing to a tapering of inflation fears. So we'll get into that, of course, as we move on. And we talked about briefly Pfizer's news. That stock did jump. They are coming out, they have released data relating to their COVID-19 pill. It is superior, certainly, to Merck and other candidates, and it's really being viewed as a game changer. So we are going to, of course, focus on some of the areas benefiting from that, as mentioned. And then earnings reports continue to dominate the market action. Those are the stocks that are being traded higher, and then in some cases really pushed lower. So earnings really is the primary driver, as it has been for the last 2 weeks. So from here, let's go ahead, take a look at the S&P 500. We're looking at a daily price chart here, and we can see this nice steady uptrend taking place here as earnings season. Well, of course, it did reverse just before earnings really started coming into play, but it has continued to buoy the S&P 500, closing at another new high in price. The index was up about 2%. We can see the RSI. It is getting up here into an overbought position. This is something I've been pointing out to subscribers to my MEM Edge report, what to be on the lookout for, what this overbought condition can mean. And then from here, we can see the stochastics. This is a faster moving momentum indicator up here in positive territory and still looking quite constructive. The market's finding support above this upward trending 10-day simple moving average. So looking quite healthy and robust at this juncture. So as usual, from here, I'm going to take us behind the scenes, if you will. We're going to take a look at the 11 sectors in the S&P 500, but what I've done is added this RSI indicator and sorted it in descending order. As always, we want to know where that underlying strength is so that you in turn can participate in that, of course, we're all about outperforming the broader markets. So let's take a look. I'll go ahead and update this view, and we can see up here in the forefront consumer discretionary. And this is the second week that this particular area has been up here. I talked about auto stocks, but that Pfizer move is not their move, but their news is pushing other areas that we will get into among discretionary stocks. Tech, again, up here in the forefront. From my work, I like to see that because technology, this is where your higher growth, faster moving stocks are, and it is earnings driven. So that's good news, as well as it would support a continuation move into some of these tech stocks. And then from here, consumer staples, material stocks had quite a move. We will see a little bit as it relates to auto stocks, but in particular chemical stocks, but again, earnings driven in that area. So then as we continue to drill down, want to make sure you're aware of some of these weaker areas. XLC surprisingly did have a decent week, up a little bit less than the broader markets. I would argue a lot of that is Facebook, actually now known as Meta. Oh my goodness, I don't can't tell you why it's escaping me, but now of course I have to know. Meta platforms, of course. So they that particular stock did have up over 5% for the week. So that was a good move there, but still languishing because a lot of the other underlying stocks are not doing quite as well. The internet related, their sales not quite as strong as anticipated. Financials down here in the weaker sector, and it did not perform well for the week, down 0.6%. There was a bright spot here that we are going to get into, however, and again, subscribers to my MEM Edge report will know about that because we had about 4 names on our list really outperform this week. So from here, let's drill down a bit further. I've handpicked some sub-industry groupings that are very relevant as it relates to growth stocks, interest rates, biotechs, and so forth. And again, from here, added that RSI descending order, and let's take a look. Semiconductors had an astounding week, up 9%, and I've been covering the markets for many, many years. This is an exemplary move. Now, of course, from here, SOXX, when you see those kind of moves, you can go in and look at the heavier weighted names. Certainly NVIDIA, big winner. But I will tell you the move into semis really drilled down beyond that. Smaller names participated as well. And again, a lot of this is earnings related. And then from here, take a look. The NASDAQ was up 3% and all about technology, of course, semi helping in there. And also we do want to, what I do want to point out here is small cap stocks up 6% this week. Super encouraging. This is all about an improving economic outlook. And again, if you were to drill down, take a look at those Russell biggest movers, it is going to be earnings. And I'm going to share some of that as we move on, because when these smaller cap stocks come in with numbers, you're looking at primarily triple digit. They do have lower as far as their prior year earnings. In a lot of places, their comparison is small. So they're able to post these triple digit earnings and the markets like it. So lots of vibrancy among small cap stocks here. So let's take a look. I mentioned that financials, even though the group was down for the week, there was one bright spot. And this is KRE, the Super Regional Banking ETF. A lot in the way of earnings. Surprisingly, we'll take a quick peek here because a lot of these regional banks tend to fare well when interest rates are rising. A lot of their sales is going to, their profit margins are going to emanate from lending activity, which does fare better in a rising interest rate environment. But take a look, interest rates down for the week. Again, today's news as it related to employment really push down those inflation fears. And generally speaking, interest rates will rise during a rising inflationary period. So big dip here, and then interestingly, bank stocks were able to sidestep that. Let's take a look here at Brent crude. This is another metric that I use as I got into our subscribers into these energy names as Brent crude began to rise. This week, a lot of energy companies did report very stellar earnings, but we are seeing a decrease in the price for oil. Lots of dynamics going on there that I will cover in my report over the weekend so we can know what to be on the lookout for. So that's a look at the bigger picture, then drilling down beyond that as it relates to the sub industry groupings and where the real relative strength is. So from here, I did want to go ahead and take a look. I can share with you. I talked about Ford versus Ferrari. So let's take a minute here and I will share with you the chart of these stocks because they have been on the move and there are very sound reasons for that. First up, we're going to take a look at Ford and take a look at this big advance here. The company did come out with their earnings in late October, but also in addition to having very strong earnings despite semiconductor and other supply chain issues, they did announce very bullish activity going forward. But Ford really is doubling down on their efforts as it relates to electric vehicles, trucks, as well as automobiles. And the stock is very much in a confirmed uptrend. Their earnings here in late October, 89% above estimates. And then the company had positive news that they are repurchasing $5 billion in their junk bonds that they had released. This is good news. They want to firm up their balance sheet. And also their October sales, they do provide monthly sales data. They were better than September. So lots of good news as Ford races to a new high. So let's just take a quick peek from here and look at the intraday because first of all, we can see with Ford, the MACD is up here, right up here at this upper portion as far as looking for upside, and it is overbought. So oftentimes, if you already own the stock, you can use this intraday. I like to use a 1 hour. I don't use it terribly often, but it can be helpful when you're looking at these stocks that have had these really big, at least 1+ week gains. So what we can see on the 1 hour here that the upside momentum is potentially shifting and it all makes sense. Again, I showed you that overbought condition on the daily. So when we see that deterioration or certainly a slowing of that upside momentum, such as late September, what you are going to be on the lookout for as a potential to buy back in is the momentum shift to the upside, the price breaking back above its shorter term moving averages, which can oftentimes lead to further upside. So from here, let's take a look at Ferrari. And this is a stock that many of you may not normally take a look at, but it definitely bears a closer look. Huge rally this week. The company is on track for record earnings this year. They did report on November 2nd. They were well above estimates, and Morgan Stanley cited Ferrari as their favorite among electric vehicle cars. And a couple of reasons for that. Ferrari is renowned for their technical expertise. Also, Morgan Stanley anticipates that the current price for this for Ferrari is about 300,000. They're anticipating that in 10 years they will be worth 500,000 or selling for 500,000 rather. But in addition to being a superior vehicle, there's also an investment value that is being talked about as well. So here's another example. Your MACD up here really hitting close to the ceiling. You can see that it is overbought. So we'll just take a quick second here and examine those same dynamics And we'll see that for now, it is still above these shorter term moving averages. It's not as liquid as Ford. You can tell just by these volume characteristics, but over the near term, it does appear to be pausing, but further upside certainly ahead for this stock. So from here, I'm just going to take a look at a couple of outlying stocks. Of course, these electric vehicles will need batteries, and the primary component is lithium. So I'm going to share with you a couple of lithium related stocks. First up is ALB, and this particular company did report their earnings. They were very good earnings this week. We can see it pop the stock out of a base, very big volume on that base breakout. That's what you want to see. And we can see the stock has historical precedent as far as its ability to continue once it enters into an uptrend. But you are going to want to use that historical precedent as your backdrop. Breaks below shorter term, momentum shifts, indicating that that uptrend may be behind it for the near term. Let's take a look at another lithium stock. This is LAC, Lithium Americas Corp. And we can see that it is powering up here to new highs and in a very confirmed uptrend. I would argue still further upside there. LTHM is another name that is Livent, and they are also a lithium provider, really shot to new highs here on very big volume. So I am going to take a brief break here. We have lots more to cover, so we'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I mentioned to you a phenomenon, if you will, that appeared to take place last week relative to those biggest gainers on earnings. So first up, let's take a look at a couple of names that really had extensive moves. I'm not going to promise you that their charts look fantastic, but here we are with Revlon, REV. The company came out. They actually had negative year-over-year earnings. However, those negative earnings were 40% above estimates. So from here, we can see the stock was up 25% just today. Let's go ahead and look at the weekly chart, and the stock was up 43% on the week. And what I did want to point out to you is that Revlon is among those highly shorted stocks, and the company, 18% of their outstanding shares are shorted going into this week. And with that, metrics, there is a website called shortsqueeze.com, and they mentioned that it would take 16 days to cover all of the shorts out there. So this is clearly a short squeeze rally on earnings because they did come out better than expected. Lots of short covering there. Let's take a look at a couple of other names that many of you who might follow this short squeeze concept would be aware of. This is Bed Bath and Beyond, another big mover for the week. They came out with their numbers. Let's take a look. Up 61% on the week. And again, not a very attractive chart, but we're talking more about the concept. This particular company, 27% of their float is shorted. And so we can see this big move out of this oversold position. Just a couple of other names, BGFV, this is Big Five, another highly shorted stock. They did come out with negative earnings that were below estimates, but we can see this big move. Let's go ahead and pull up the weekly here. It was up 26% on the week. 43% of their float is shorted, and it would take about 6+ days to cover those shorts. So I have other examples as well. We can just take a quick look at SHAK that came out with numbers. The stock rallied over 24% for the week. So that was a theme, an anomaly, if you will, that I picked up on. So from here, what we can do is take a look at stocks that are due to report next week that have high short interest. I'm just going to share a couple of names for your radar. I would say that you have to be very nimble to trade these stocks, because you can see really how they can have these explosive moves. So Beyond Meat, BYND, is due to come out with their numbers on Wednesday, and 30% of their outstanding shares are shorted. So any kind of good news is what you're on the lookout for. Maybe put it on your radar if they report. SDC is due to come out on Monday. This is Smile Direct Club. Again, not attractive charts, but really more as a point to share with you. They have very high short interest, so that was an anomaly. And certainly you can go to shortsqueeze.com, and there are other websites, and take a look, see which of those companies are due to report their earnings next week. Actually, there was one other name worth mentioning here. This is Avis Budget, CAR, and they did come out with numbers 56% above estimates, but you can see this big gap up, short interest. Okay, let's move on, because lots more that I do want to make sure that we cover here, and that is I talked briefly about how many stocks really have gapped up on earnings this quarter. It's been pretty impressive. So I'm going to share with you a couple of those stocks and what you can be on the lookout for. So here's Papa John's, PZZA. And what I did want to point out to you, let's see, yeah, we do have those moving averages here. So a couple of factors that are worth noting, and that is your MACD crossover bullish ahead of the report. And then upon release, the stock did have a move to bullish territory on that MACD. So that is constructive. So oftentimes it can be quite helpful if you go back to using historical precedent on these gaps up. And we did see, it's not quite as evident here, but we did see a gap up here in early May on strong earnings, not quite as big, but the stock did pull back before resuming a very nice confirmed uptrend. So this is another play. When you see those big moves, you are going to want to drill down further. Oftentimes it can precede continued upside movement, but quite frankly, for me, just looking at this volatility, I am not going to be as interested. There are more sound names that we can take a look at that aren't going to be quite as volatile. So let's just take a quick look here. MRK, of course, they were on the news, in the news today for not being as vibrant with their COVID pill. The outlook was diminished given Pfizer's really superior data. So what we did see is this gap down 10%. Now, interestingly, what I was going to point out to you is no longer taking place, and that is that Merck, into the close, I would say within the last maybe 20 minutes, it broke support. But prior to that, it was finding support at that 21-day. So we will move on from this particular name as far as what to be on the lookout for. Let's take a look at Halliburton. I talked about these energy names really coming in with great numbers. So here we are with Halliburton. The stock did gap up on earnings, but it is currently pulling back. So when you see these stocks pulling back, what you are going to want to do, let me go ahead and mark this up so I can be more clear here, and we can see you will want to pay attention to the prior base breakout. That's going to be your area of support. And at this juncture, we are finding support at that prior base breakout. If we break below that with your outside momentum indicators also turning negative, that would not bode well, but for now we are finding support. So from here, I did want to share with you names that are actually holding in well, and what you're going to want to look out for names that appear poised for further upside. So this is Boot Barn, BOT, a little hard to see, but they did have this gap up, huge volume, thrust the stock into a very nice uptrend. So if you see a continuation rally over the next subsequent several days, oftentimes that will point to further upside. We are getting a little bit overbought here, but let's take a look at another company. This was one of the first to report earlier, and this is UNH, United Healthcare, gap up on earnings, thrust the stock into positive base breakout, subsequently positive outside momentum indicators, and then the stock did go on to rally. Now, oftentimes you will see this as the stock really consolidates after this particularly big move. As long as we find continued support at this 10-day moving average, we may see a little bit more of a pullback, but you should be in good standing going back into this March period as precedent, because that is a period also when UNH turned positive as its momentum indicators after earnings. It did pull back, but then that secondary rally was quite healthy. And I think we have time. Yeah, I'm just going to share one other name that is constructive, has been constructive, and you'll see a lot of this. This is Arista Networks, huge gap up. Not only did they report earnings, they reported a stock split and other news that helped propel the stock out of into a new high here. But now what you are seeing is this subsequent rally. Beyond that, you're going to want to pay attention to the volume. It is generally above average. And then again, use those outside momentum indicators to indicate that the stock is due a pause, certainly given the extensive move that it's had. So from here, I did want to mention to you some other names that are due to report next week. Disney also wanted to mention, so Disney had a nice up 3% day. The stock does not look well, but I did want to dovetail into sharing with you stocks on that Pfizer news. And we can just take a quick look here under consumer discretionary and take a look at some of the underlying groups that are really picking up on this concept that this pill will allow more people, or certainly encourage more people, to be vaccinated. And from there, a lot of leisure and travel related stocks. Now, EXPE did come out with earnings, but Airbnb also came out with good numbers. So it's a combination of those strong earnings also combined with this concept that people will be out and about a bit more. I'm going to take us back to StockCharts.com initial page here and just very simply share this candle glance view from your biggest movers today on the S&P 500. You will see a theme: Royal Caribbean, RCL, Live Nation, I mentioned, Expedia Airlines had a big day today, Norwegian Cruise Line. So these are areas and stocks I urge you to drill down and take a closer look at. And for those of you that have not already, go ahead and take advantage of my special offer for my MEM Edge report. You can use that link below. We're going to be covering all of this as it relates to the move into consumer stocks, which had been lagging up until about 2 weeks ago, and lots more in my MEM Edge report. Everyone, have a great weekend. See you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.